Welcome to another edition of the Macro Minutes Investment Show here on the Samaritan Financial YouTube channel. My name is John Burrell. I'm your strategy manager, and I'm here with the IT administrator, Chadwick.
Hey, I'm doing fantastic. How are you?
I'm doing good. I'm looking forward to today's show.
All right, yeah, let's jump right in.
So getting right into the charts here, we're going to look at the S&P 500 futures, MES. They're currently at $6,854 as they trade overnight. Trend level for that is all the way down at 5,789. So this is still a bullish trend. We've had a little bit of volatility, about a 5 or 6% drop from the top, but we are almost back to all-time highs. Looking at the VIX, which is something that we're going to start covering more here. We hadn't really covered it a lot, but it's basically the volatility on the S&P 500. It's currently at 16.48. and trend for it is all the way at 27.86. So it's bearish trend, and typically you have less volatility when a market is bullish. So that's just kind of showing the other side of that coin. Moving to NASDAQ. NASDAQ futures is currently at 25,350. Trend for it is all the way down at 20,399. Now last week, you'll remember us talking about, if you caught the show, how we were bearish on oil. This has been a really good call. Oil made new lows since 2021, is back at 2021 level prices. Its current price is at $55.63. Trend for it would be all the way up at $68.26. So it is still bearish trend. So keep with our signal on that one. Go into gold. Gold is still bullish trend at 4,353 is its current price. Trend level for it is at 2,920. So a lot of room between the price and the trend line for it. Same thing with silver. Silver has just been shooting like a rocket. It's at $65.68 an ounce. Trend for it is about half of its price at $32.38. So very bullish on silver right now. If you went back to the last 4 weeks, our signals are definitely doing their job as far as calling these markets overall direction. Looking at Bitcoin, Bitcoin is trading right around its trend level. It's at 87,670. Trend level where it is at 87,330. So it is right above its trend level. So this is something that we're really watching right now to get right on the Bitcoin call. Right now it's technically bullish, but you want to really look at that trend level, and we would be buying above and selling below. Now we're going to look at MSTR, which is a company that holds a lot of Bitcoin, and they have been in the talks a lot in the news right now because with the pullback in Bitcoin recently, they've lost a lot of their price has went way down. It was all the way up here at like $400 and almost $460 a share. It's currently at $167.50 a share. Trend for it is at $250.92. So it is very much bearish trend. They have a lot of leverage on in the Bitcoin space, so it's not looking good for MSTR right now. Here's another one that we've added to the charts, which is Ether futures. It's another cryptocurrency. It's at 2,960. It's bullish trend. Its trend level is at 2,151. Now we're going to look at Tesla. Tesla is at $489.88. Its trend level is all the way down there at $284.65. It is way bullish trend and doing it's doing very well for investors. Now we're going to look at Tesla, which we'll come back to this later on in the show, but this is a yield max product that we're going to take a look at and compare to Tesla. It's currently bullish trend at $41.15. Trend level is at $24.89. Nvidia has been in the news with the AI bubble talks recently and its overpriced evaluation, as some investment headlines has read. It's currently at 177.72. Trend is at 114. Apple, another mega cap stock. It's at $274.61. Its trend level is at $237. Meta, which is basically Facebook, it's right around its trend level. This is one to watch if you're invested into it. Its current price is $657.15. Trend level is at $653. All right, now we're going to look at interest rates. Now, we actually don't use our trend model for interest rates, but we do want to acknowledge them. The 1 year is at 3.5%. The 2 year is at right around the same, 3.5%. 5 years at 3.71. 10 years at 4.16. And the 30 years at 4.83 for the interest rates. And we have seen them continuously go down as the rate, as the Fed has cut rates. So this is no surprise here that the chart's down to the right hand side of the screen. So looking for interest rates to continue to decline as the economy declines, and we'll probably start to see some of these bullish trends start flipping negative. But we're going to stay in the trades until those things happen. And with that is our market overview and charts for our trend levels. Now we're going to look at our S&P 500 total replacement strategy that we manage for Collective 2. The links will be in the description if you're interested. What this does is we look to increase returns by reducing drawdowns, large drawdowns. So if the S&P 500 has a 10, a 15, a 20, a 50% decline, as we've seen as valuations have gotten higher in the past. So when valuations are super high, it usually follows a big decline in the S&P 500. We see recessions. So what we try to do is risk manage that with our trend levels like we went over in the charts. So when the S&P 500 breaches that trend level, we're able to get out. And then when it goes back above, we get back in. So we're not losing out on the upside, but we're protecting to the downside. So right now we're right in line, as you can see here. We are right in line with the S&P 500. We're currently down 2.7% from the all-time high of the S&P 500, which is when we started this about 40 days ago. And our max drawdown is 7%. It's right in line with the S&P 500. The dashed line here that you can see is the S&P 500, and the green is our strategy. We're right there with the S&P 500, but when something drastic happens, like when the Trump tariffs first came out and we had that massive drawdown, we would have protected against that drawdown and then got back in once all of the chaos was over with. That's our goal with the S&P 500 total replacement strategy. It's only $5 a month for the signals, and if you want it completely automated, it's $55 a month. And that pricing is for the first 3 months. The signals go up to $75 a month, but we think this is a perfect way to protect your downside and still enjoying the gains of the S&P 500. And that is our review of our strategy and where we're currently at. Now we're going to get to the educational corner.
All right, sounds great to me.
Now, getting to our educational corner, we're going to talk about cost basis reduction. Essentially what cost basis reduction is, if the price of an asset is say $100, you can sell a put at $99 and you'll collect premium for that. It's like selling insurance against something. Insurance companies sell you insurance, but in the markets, it's like you can be the insurance company and collect premiums. So you can sell that insurance. If something happens to the asset where it depreciates, you can buy it at a cheaper price than if you would have just bought it at its starting price of $100. Now, this strategy does well to reduce your risk, but it also reduces your returns. So if we look at something like Yield Max, for example, Yield Max has a option income strategy, TSLY. And what they aim to do is sell covered calls, which is another version that you can do instead of selling puts. You can own the asset and sell calls against it. So you can own the asset and sell calls against it, and collect the premium as long as the price doesn't go above that call. Now, if it goes above that call, you have to sell all of your shares at that price. Now, it captures upside, but it reduces risk. But what a lot of people don't understand, and this is what I don't like about yield max, is yield max, if you look here on the chart, I'll highlight it, it's saying that you're getting a 99% return. Now, a 99% return on this product is just not true, and we'll show that here in just a second. But they're saying, oh, you're getting a 99% yield. Well, it's really not a 99% yield. They're giving your money back, and there's some other things going on. But when you look at an investment to do, you want to look at the total return of that investment. If we look at our charts and we pull up Tesla, we have Tesla here on the charts, and we'll add TSLY to the charts. Now, in TradingView, if you click on your settings, you can adjust for dividends. So if you don't adjust for dividends, it just shows the price of Tesla, and you can see it's deeply negative. But you want to incorporate the total returns of an asset, not just the price of the asset, but also any payments, dividends, or yields that it pays off. So Tesla, its return over the same timeline is 178%, versus Tesla is at 67%. And even if you move the chart here, because it's doing some weird things with the prices or whatever, but you can see that starting the chart about the same price, Tesla's up 67%, Tesla's up 98%. This is the total return. And as you can see, as the price moves higher, it starts to detach from the price of Tesla. So they're claiming that they're giving you this phenomenal return. In all actuality, they're really not. And they're just hiding the price of the asset by showing you this big return. So even though they're reducing their volatility a little bit, they're really not providing the returns of just buying the asset. So it's really worthless. And a lot of people are like it's like they're a cult about this. So it's really, it's really not something that we would invest in, and we don't think you should either. And that's basically our educational corner on cost basis reduction. And don't buy Tesla.
I hear you. Hey, yield max promises income,
and they deliver lessons.
And hey, listen, tuition is not cheap.
So stick with our strategy here. And we've been Samaritan Financial. We'll see you next week.
All right, stick with it.